right, let's get into it. Why is the market ripping higher, right? We had talked about this in the past. We're going to go over that. Technicals, fundamentals, macro. Stay with me. And I know my camera sucks because I got to update. Now my camera's bad. Either way, let's get into it. All right, so we got S&P 500 here. Okay, we pretty much ripped from last week. But the real rip came from what? It came from the end of tax loss harvesting, right? The mutual funds stopped selling. And we kind of call this, if you are new to the channel, I want you to pay attention here. We called this last week. If 10-year keeps coming down, this will be a vicious Santa Claus rally because the dollar comes down also, as long as oil stays pretty tame. And oil is pretty soft at the moment. I think investors capitulate. If we get through this Friday higher, this is a Santa Claus rally. Yep, so we're getting that Santa Claus rally today. We're starting to get that Santa Claus rally. What is this due to? This is due to, I think holistically, we're seeing rates come down, right? We are seeing rates come down, but don't listen to me. Why are rates coming down? Why isn't rates coming down? Because inflation expectations are coming down, because oil is coming down, because oil is the most important chart, right? For the macro today, I think it is the most important chart because it's going to predict where inflation goes, right? The Russian-Ukraine war, the spike is what kind of accelerated the bear market, right? The Fed was hiking rates, and then you get a spike in conditions, in tightening conditions. The dollar goes up, yields go up, right? The Fed keeps hiking, and now the oil's coming up. And everybody thought, oh, this is 1970s inflation. I'm going to show you why that can't happen, why it's not going to happen. You're going to hear it here. Everybody else is going to tell you it's a bear market, it's a recession, it's deep. Cool, great, maybe it does happen, but the probability is definitely not there. Let's listen to what, and we're going to go over why this is such a big deal, why oil starting to roll over is such a big deal. Okay, but first, let's listen to the Fed. Listen, the Fed is very soft. Inflation expectations are coming down. Inflation is still, okay, damn it, my camera sucks. Inflation is still the worst. Okay, it is still, not the worst. It's still the biggest issue for investors. They believe that inflation expectations are coming back, which is exactly why we see such high cash levels. Okay, here's your cash levels. Boom. Look at these cash levels. Look, I'm going to show you on TikTok. We're at March of 2020 pandemic highs as far as cash levels, right? Why is cash so important? Because it's all about position. If you're positioned into cash because you believe the end is near, the end of the world, but it doesn't happen, and actually the evidence shifts towards the beginning of the world, right? And I'm not saying we're in the beginning of a new bull market, but we are in a Santa Claus rally, and there's a lot of reasons for that. So everybody's stacking in cash. We just showed you that, okay? And inflation is still the biggest issue for investors. It's still the biggest issue for investors because they believe it's going to be 1970s again, right? Oh, excuse me, rates are too high. And this is the Fed. This is the Fed speak today. Kashkari, Neil Kashkari. Here, let me show you guys on TikTok. This is Neil Kashkari. He's been the most, listen to this. This is important. He's been the most hawkish Fed governor on the Fed, and this is what he's saying now.
What is it that you're looking for?
Well, I'll give you some good news. Core PCE on a 3-month basis is running about 2.5%, and it's lower than the 6-month data. It's lower than the 1-year data. So that suggests that the disinflation is real. If we continue to see inflation numbers of that range, 2.5% or lower on a go-forward basis, that would tell me, okay, we are now on a path back to 2% inflation.
Okay, next time I'm going to do it without the music. I thought it'd be cool, but it wasn't that cool. Only for an intro or for short. Anyways, yeah, Neil Kashkar, what? 3-month annualized inflation is at 2 point. Did you hear that? 2.5%. They're near target as on if you look the last 3 months, which is arguably the best way to measure inflation. Last 3 months, not last year, not month to month. I mean, you could take all of them, right? The last month, the last year, the last 3 months, and the last 6 months. Either way, the last 3 months is at 2.5%. So disinflation is what he calls for. Disinflation. That is the Fed governor calling for disinflation. What does that tell you? That this market can rip because now the Fed is getting positive. Now, where's that disinflation coming from? Well, part of it is GDP is not as strong as you expect, right? It came down. Third quarter was 4.9%. Now we're sitting at 2.3%. Okay, and so now people are going to call for a recession. Well, you need the GDP to go negative for an actual recession. Are we going to get negative growth? Stay tuned. We're still going to get that rip-roaring rally. We're starting it now. And now that oil is coming down, now that oil, the big burden on the market is coming down, the war is not materializing the way that people expected to. The reason why war is such a fear for people because of the oil price. It's not necessarily war. War creates more spending, more jobs, more economic activity, but it is oil spiking that is the issue. And if oil is actually dropping, right? If oil is actually dropping, then financial conditions are easing. You get oil falling. You get the dollar. Now, the dollar hasn't fallen out yet, but you do have rates coming down. And what did we just say? Rates come down. That's because bonds are being bought up. People are buying up TLT, right? They're buying long bonds on the long side. Bonds go higher, stocks rally. As bonds rally, stocks rally too. If you see bonds rally, and look at this pattern here. We are getting a cup and handle, right? So we're near the breakout. If this keeps breaking out, if we keep seeing bonds start to rally, continuously rally, break out even further because of that, there's a record inflow. You want to see the record inflow? Here's the record inflow of US bonds. Okay, this is the record inflow. This is the data right here. Okay, all-time high record inflows to U.S. bonds. Everybody believes that there's going to be a recession, whether it comes or whether it doesn't. That still lowers rates. You can see in 2023, all over here to the right side, all the way to the right, the red arrow shows the biggest allocation to assets actually went to U.S. Treasuries, money market funds, U.S. Treasuries. Not very much in equities. Actually, equities are empty. Nobody's in equities. What does that tell you? There's a lot of cash on the sideline. That's why you're getting these vicious upside rallies, especially in the Qs, already breaking out of that flag pattern, right? This is a great bullish setup. Now, I said, hey, we should get a pullback. I still think we get a pullback, but this might just be a huge melt up. We might be seeing, wow, that looks so different. That sucks. Anyways, we're seeing a big melt up, right? This is a huge melt up. Now, we will get a pullback at some point, but expect people to come in because the macroeconomics, right? The macro forces are easing. What are the most important macro forces? First, it is long yields. Yields, this is the rate of interest, right? The cost to borrow money. As yields fall, if you're new, as yields fall, you know what else happens? As yields fall, well, guess what? Valuations go up because the cost of borrowing, the cost of capital into the future is lower. That means automatically your earnings go up. That is called multiple expansion. We're starting to see multiples expansion, meaning the price goes higher versus the earnings because the cost of those earnings go down, right? So that's your first macro force. The second macro force is the dollar. Well, the dollar had a little bounce, but it is now below. Actually, it's still teetering at that 105.50 to 106 level. So it's not, it's not over yet. If the dollar drops out, expect a big, more force to the upside, more headwinds to the upside. But on the other hand, the dollar is still pretty weak, right? The dollar is not charging up. It's not charging higher. Look at the RSI. It's going lower. Now, at some point it's going to bounce and we'll see if it's a real risk off rally on the dollar or if it's just played out. Okay. The third, important force, which I think is the most important, is literally oil, what we've been looking at. Okay. Inflation expectations are down. Why is this important? Because this points to the next. Now check this out. The last time we had a very big downside CPI print was back in November of 2022. That was right before the vicious January Christmas. Well, it wasn't a Christmas rally. It was a New Year's rally in the stock market. Why did that come? More than likely it was because the inflation fears came down because oil dropped out. Core is already coming down as much as people say spending and consumption is high. No, it's not. GDP is down, bro. GDP is down. So oil comes down, energy inflation comes down, housing's already rolling over, vehicle inflation's already coming down. So energy comes down. This was a big rip-roaring rally for the stock market. Now we're getting 2 months in a row. Well, we're not there yet, but we got 1 month of down oil. Okay, it started in the 90s. Now it ended down here in the 80s. That means November's inflation print, which is next Tuesday, I think we get an actual sell-off into the inflation print, trying to price in the worst or the surprise. It doesn't happen. Boom, stocks rip higher. So this might be the top right now. I think we might be at the top. I think we might be consolidating here, right? Earnings are coming in plush too. Everybody's like, oh, earnings are so terrible. That's not actually the case. But let's finish this narrative. Big cup and handle for the S&P. Maybe we don't rip higher until after the inflation report next week. We pull back. What does it look like we're forming here? This is why technicals are important. This is psychology. These are the choices. These are the decisions for the actual market participants. This isn't just magic. This is not manifesting prices. This is looking and tracking the probabilities of what can actually play out. So what, we get another dip here? I'm expecting a dip here. I think the probability is higher. We dip, we pull back, we form this reverse head and shoulders breakout, retest on inflation. Oh, inflation's better than expected because oil came down last month because core CPI is already falling because headline CPI is now starting to roll over. And we're guessing now that that trend is, by the way, CPI has fallen the fastest ever in history. As much as you hear inflation is so high, it's reaccelerating. Please debate me. It is where is it happening? So we've actually had the fastest fall in inflation in history, the fastest fall ever. And people are still thinking inflation is coming back higher while there's less people in the economy. While the baby boomers are retiring. Where is it going to come from? Consumption is down. We need pump. We need pump from the fiscal. What does that mean? We need Joe Biden to pump to get inflation back out. He's probably going to do it next year because we do know consumers are slowing. Anyways, you get this check, boom, you run back up. Santa Claus rally. Now I'm tempted to say all-time highs again. I already said NASDAQ, I think so, but now I'm thinking all-time highs because we came up pretty quick, right? Especially if that inflation number is better than expected. Now, what is the other part of this? Well, let's take a look here. Why is oil going to continue to stay tame or at least stay soft? Okay, let's just call it soft oil because the U.S. is the top producer and the top consumer of oil, the biggest commodity. And if we're seeing demand, here it is, if we're seeing demand come off and peak for the U.S. while we're at a record high production, which I need to show those charts. I'll get the record high production up eventually, while cash levels are at all-time highs, what do you think people are going to do? They're going to say, oh my God, oil is not as bad as we thought. The war is not accelerating the way we thought it was. We better get back in the market for the year-end rally, right? Also, you have a lot of fund managers who sat out NVIDIA, Apple, Amazon, Google, maybe not Tesla, but they missed the last boom in the summer. They missed it. They got to show clients, hey, I'm in the Mag 7 or else they get fired, right? This is a performance sport here. This is the only sport, this is the only game where novices compete with professionals. This is why I want to help you out here. This is why you should give me all your, no, I'm just playing. This is why I'm trying to learn as much as I can because I want to beat the professionals, right? And they tell you there's a big recession. People are wrong, right? Some guys are right, some guys are wrong. But either way, you want to look at all the data, the macro, the technicals, and the fundamentals and put it all together. And what we're seeing is the actual earnings picture is not that bad. Okay, so what do we see? Oil's coming down. Demand is falling. Supply is up. That's a good picture. The war is not accelerating. There's a lot of bonds coming into the market. A lot of bond buying means bonds go higher, means yields come down. If yields come down, valuations get better, stocks go higher. Okay? October is the bear market killer. We've been saying this. October is the bear market killer. Why? Because the mutual funds are done. Look at this chart. I mean, look at this chart. This is literally the seasonality. This is called seasonality of the stock market on average. Why is it that all of a sudden here in October, at the end of October, stocks start to boom, going all the way back to 1950? Why? Because it is a fiscal calendar year end where the selling stops, because they can now benefit from buying lower. That's why we saw IWM small caps, those unprofitable companies, go up 8% and beat the S&P and beat the Qs last week because there was a lot of selling pressure, and now it reversed at the beginning of, I guess in the mid last week, right? Because it was not till after October 31st. So we saw that reversal. And at the same time, we're seeing global liquidity pick up. China is literally not going to stop printing. They have no choice. China will keep printing money, right? China's going to keep printing. Why? Because their economy is weak. They have to keep printing. And then, oh, well, S&P companies are going to fall apart. We'll go over the fundamentals, but look at, also the Fed funds rate have not even affected the net interest payments from the big companies. Most of the big S&P companies, I have so many charts here pointing to the Fed rate hikes are not going to hurt S&P 500. It's just not going to happen because they already locked in lower rates. And where do people run when growth actually slows? They run to tech. They run to technology plays that can still benefit, that can cut their costs. As a matter of fact, we have that on Twitter. They can cut their costs and they can still create more margin, more profitability with lower revenue. So there's a flight to safety, a flight to quality, and that quality happens to be quality premium tech. And that's why Qs are running up. And that's why the big NASDAQ, as a matter of fact, let's go look at the big stocks here. I mean, ARK is even moving. Amazon ripping higher, right? Amazon's ready to rip out. Google had that pullback and it recovered, right? We're getting a recovery in this earnings seasons. Meta, oh man, hold on. Okay, yeah, Meta is Meta's okay. It's just climbing higher. Meta looks pretty good also. So you're seeing a recovery after earnings season. All the big earnings are over. Look at Microsoft just exploding higher. Bid. Is there going to be a pullback? Yes, but that kind of strength tells you that cash pile is now unraveling back into quality plays, back into the stocks that benefit the most. Tesla is still holding on here, right? Tesla's still holding on. Also, we got some news for Tesla. Yes, I track Tesla the most. And we do have some news for Tesla. What is that news? It will be coming out over the next week or so. Let's go ahead and jump over to Twitter really quick. Is this it? I think it is this. And this is, cuts. We are seeing cuts on earnings. This is the largest cut in S&P 500 estimates, but also we have the largest we'll get into that. Let's get to the news for Tesla. So here's the news. Here's what's going on for Tesla right now, right? Gary Black, if you want to follow him, he's always tweeting about Tesla. If you hate Tesla, well, you're not going to like what he has to say. Either way, what's happening is over in China, they're actually going to plan to increase prices. The big fear for Tesla was that they cut prices too much. If they cut prices too much, profitability goes down, margins are down. They're cutting prices because those rates are up. Now the Fed has paused, so investors can be more confident that this is the end of hikes. If this is the end of hikes, well, Tesla can now figure out a way to increase prices, right? Or maybe they don't. Maybe they just create more revenue because rates are not going higher. Either way, the fear of rate hikes going higher is over. Okay, so it's all about profitability. Over in China, they're producing faster. The Shanghai factory is the most highest productive factory there is. And the EV market in China is even bigger than the US. Okay, California is the biggest, California buys the most. I mean, if you go to California, if you're on the streets in California, you're going to see more Teslas than anywhere. You'll probably see more Teslas on the street than you see other regular cars, right? So either way, okay, I'll get to your guys' comments. I'll try to get to them. Jump on the YouTube if you want me to see them. I'll try to go back and then address them. I definitely want to address them. Anyways, so yeah, just go on to YouTube and put them in there because then I can see them. I'm still on my rant here. Okay, Tesla Model Y. Basically, the models are getting increases in prices, right? They're increasing the prices on the models. Also, what was the other part? Also, it looks like there was one other. Oh, India, right? Now, this isn't going to be till the future, but the Indian government is actively working to streamline approvals. They're trying to get Tesla factories started. They're trying to get gigafactories over in India. And why is that a big deal? Why is that even happening? Because manufacturing facilities bring the most jobs. They bring the most jobs. They're correlated with a better economy. So India wants that, especially with what they're doing. Okay, so that's huge for Tesla. That's huge. Is it going to materialize tomorrow, next week, next month? No. But the price action, if the Qs keep ripping higher, this is going to be a nasty rally, right? Look at the Nvidia already back to all-time highs, right? Near all-time highs. It's not there yet, but this is a powerful wedge pattern for Nvidia. So you're seeing that AMD already ripped higher, right? AMD is on its way. So the market is strong here. It doesn't look like it's going to be pulling back anytime soon. Now I'll get into the questions, Q&A. I mean, there's more stuff I want to go over, but I just want to make it clear this market is rallying because rates are falling and rates don't seem to be, it doesn't look like rates are going higher anytime soon with oil prices rolling over, which was another fear for investors. Those fears are disappearing. Those fears for investors are disappearing and the Santa Claus rally is starting to spring up. Okay. Here we go. Jervon Claire. Whatever happened to the deposits people made to the Cybertruck when it initially came out? Was it returned? No, I think it's like 2 million deposits for Cybertruck. And, Cybertruck's going to get attention. It's going to get attention. People are going to go to the website. It might not be the most beautiful car, but what do they say? Any attention is good attention, right? To even bring people over to the website and actually educate them that Tesla car EVs are actually decelerating in price. They're lower than other, automated other vehicles, right? I don't know. They begin shipment for November as they was mentioned Elon on earnings. Okay. Yeah. So look at Tesla. Tesla is in a tricky situation, but again, if long rates keep falling, Tesla's a risk asset. Okay. Tesla's a risk asset. You're going to get that 7,500 instant rebate. That 7,500 instant rebate starting in January, that's another catalyst. Cybertruck on the 30th, that's another catalyst. The 2025 model, that won't be for a year out, maybe 2 years out. The way Elon does things, that's another catalyst. Either way, oil's coming down, rates are easing, the dollar's not really going anywhere, a lot of cash on the sideline. Looks like a Santa Claus rally is starting to work its way out. Let me try to hit some of these comments. I'm going to run through these so it doesn't take too long. And what's the hypothesis? I just went over that. See, what do we got here? Because we has, come on guys, you guys got to type a little more clear than that. Because we has a short squeeze on treasuries last week. Yeah, we had a short squeeze, definitely a short squeeze. And look, yields can go back up. Yields can definitely go back up because there's still a billion. There's still like 1.5 trillion, probably 1.3 now, trillions of US treasuries going onto the market. So I don't expect rates like 10-year. Let's just go to the 10-year. I don't expect rates to just collapse and go down forever. They'll probably come back up a little bit, but also you might see this. You might see the head and shoulders, right? Rates, they come up again. I think they're done peaking. They've peaked and they come back down, right? And then you really get the rally continue. The VIX is dead. The VIX is rolling over. The VIX is literally reflecting insurance against the S&P, right? It is fear, and that fear has disappeared. Why? Because inflation is coming down, because oil is not spiking, because yields have came off, because the Fed is done hiking, the Fed has paused, and fear came off. That's the most powerful, that's it here. That's what we're looking at the moment. Not in the Santa Claus rally yet. That's cool. I mean, I would say we're in leg one, right? We're in the first leg of the Santa Claus rally. We came to the top of the range. We got to get above it to get to leg two, and then breaking out to all-time highs would be leg three. Can we get there? It is the beginning of November. We still have a month and a half. If there is no black swan event, if oil stays tame or stays soft, if oil continues to be soft, Qs are going to all-time highs. SPY could struggle because there's a lot of S&P companies that are still not great. They're not doing the greatest, but for NASDAQ, they're killing it. For NASDAQ, they're killing it, right? They're beating earnings. So that cash on the sideline has to go somewhere. Not in this, not in the Santa Claus rally yet. Okay, cool. Just address that. Hey, Jeremy, would you say it is a good idea to have opposite daily bias if we're to trade oil with future Qs? I'm trying to understand what you're asking there. Would you say it is a good idea to have opposite daily bias if I were to trade oil against the Qs? I'm not a pairs trader. I don't want to give too much. I don't want to give thought to that because I'm not a futures trader. So I don't trade futures or pairs. I mean, futures is just NASDAQ. I wouldn't trade pairs. I would just say this. Oil has already made a big fall, right? I wouldn't short oil here. It could go lower, but I mean, it looks like it could go lower for sure, right? It's rolling over. But you always want to wait. If you're going to short oil, I'm not going to talk about the pair because I don't know exactly how the pair works, but in general, the concept is the same, right? The concept is the same. You want to wait for oil to come back up, get rejected maybe by this big level, 83.50. It might come up here. This has been a big level for a while, right? 83.50. See if we can make that a little larger. 83.50-ish, 84, 83.50. That's been a big level. And so when it gets back up there, it even looks like you could say 80. I don't know. It's somewhere around there, 80 to 83.50. That's where you want to short oil at and go long NASDAQ. But you want to wait for things to clear. Right now, it's very bullish. Wait for a pullback and consolidation. You want to see the retest on both sides and then get long. That increases your probability. You don't want to just get long now because everybody's in it. It's happening. So I'd wait for the retest. What else we got here? Yields, dollar, oil, macro forces, great advice. Yeah, those are the macro forces. Look, I'm still working on the course to offer you, a way to look at the market, to frame it, because that's a problem. There's so many elements to the market. So this is going to help you to frame how to look at the market, or at least how I do, right? There's other ways to look at the market, how I look at the market to dissect, okay, what are the moving parts? How are these things correlating? What do I want to focus on? What do I not want to focus on too much? What do I want to put at a more priority than others, right? What are the macro forces? What is the macroeconomics? What's happening here? Inflation's coming down. We've seen core coming down on a 3-month annualized basis. I'm still riding that Amazon. Yep. Hey, Amazon's right. We said Amazon should be going up. Where's SPX at? It's because I just drank coffee, bro. I just drank coffee. I was working on the course this morning. I just drank a lot of coffee, so I was pissed though that my camera, I updated my computer and all of a sudden the camera isn't working. That pissed me off, but it's all good. It's an easy fix, hopefully. Oil stepping into a buy zone. Yeah, oil selling off pretty hard. We'll see how it plays out. I don't see that big melt off the high on your SPY chart. Mighty King says, I don't see the big melt. I mean, it just melted up. So S&P just exploded higher. So I mean, I don't know. You don't really have to see it; it just happened, right? We just melted up. We dropped the 200 moving average and just exploded, right? Vicious Santa Claus rally, up 6%, and the Q's even more. So we probably get a pullback. We probably get a pullback, form that head and shoulders, that reverse head and shoulders, and then break out. That's what I'm saying. And and again, Mighty King, I don't see the melt off the high on your SPY chart. We're not at the high yet. We got to get above this level, right? 438. We got to get above. I think SPX is 4400. 4400 is a big level. That's why I think we still pull back. We got to find support, but the macro forces are in favor of a year-end rally so far. I've never seen you going short on market, always biased towards calls. You might get right. Well, I don't need to go. I don't need to go short or long. Who is this? I mean, you point out a good thing. If I go short, what I'll do is I will short against my calls. I'll sell my calls. I'll sell against my calls if I go short. So I don't really talk about my trades because it doesn't correlate to everybody. I'm just trying to give information here. I'm trying to give information, a way to form a basis for trading, for investing. I'm not telling you what I'm doing, right? That's irrelevant because my risk appetite's different. The way I trade's different. My knowledge is different. It wouldn't make sense for me to tell you that. All I'm saying, I'm more bullish, of course, because I mean we've been in we've been in a bull trend since October of 2022. This is why it's way more dangerous to try to short the market when it's in a bull run, right? That's way more dangerous because you have unlimited losses versus if you go long. Let's say you were long here. It went up, it's down on you, but it's ripping right back up. The market goes higher over time, so I'm going to have a long bias. That's just common sense. I'm going to have more of a long bias in general, and my bias is always when there's an extreme overreaction to the downside, I want to get long, okay? Then when that RSI pulls back like a rubber band, I want to get long with other variables in mind too. I want to see the macro forces in my favor also. Hopefully that answers your comment. But I'm open to criticism. Yeah, you guys can criticize me. I'm definitely more bullish than I'm not, especially with everybody so bearish. China has the world's biggest bridge. Tesla thoughts on next couple weeks? Well, Tesla's a tricky one, but today's price action looked really strong for Tesla. Yeah, you're right, Dimaj. Amazon and Big Man's coming. He's been looking at it too. Amazon's kept a really low profile for the past 12 months, and now it's really ripping. And I would say there's still a lot of room there because there was a survey the other day. There's a survey that came out, and it showed most people are going to keep shopping at Amazon and not these other places, right? They want to get delivered. So Amazon's going to keep strengthening. It's just been lagging. This is where you want to get bullish on names that have a lot of long-term secular trends. They have good margins, they have good earnings, they have demand of the market, and they haven't been touched yet. Super excited about the course, bro. One of the best in the game for fundamentals and macro. Appreciate it. Yeah, me too. I'm excited too. I don't want to go quick and I want to give you my best. So I'm taking my time on it. Hopefully it brings a lot of value to you guys. Let's see. Tesla thoughts on the next couple of weeks. So, I really want you to look at the cues. If you're looking at Tesla, you really want to watch the cues. How are the cues reacting? Right now, it is bouncing, right? It is bouncing pretty strong off this. So I have the RSI, kind of like the pressure on the RSI. It could roll over again and maybe hold here and then break out. So I think Tesla might have another couple weeks. That inflation report is going to be huge. This entire last couple of years have been all about the macro more than fundamentals. Fundamentals are still there, but it's all been about the macro. The biggest macro factor is inflation. If inflation shows progress, even better progress, because oil rolled over last month, Tesla could rip because yields would come down and Tesla could really rip. So yes, I'm going to say by next Tuesday, Tesla's higher. Even if it pulls back, I think by next Tuesday it closes, or by the end of the week, by next week, what is this, November 14th, 15, 16, whatever. By next week, I think Tesla fills this gap at 242. It could happen quicker, could take longer, but the narrative is there. If they do cut prices, or if they do increase prices in China, then investors, this could be a very vicious rip higher in the short term, because investors are most worried about prices or margins not bottoming yet. So if they increase prices, the opposite is happening. You get a positive catalyst there. And, Tesla probably has the most catalysts than any other stock. I'm telling you, they have the most catalysts, which is why they go so high to the upside. They get exaggerated, and then to the downside, very exaggerated, because nobody knows how to price it. It's not really automotive company. It's also an AI company. It's also this. And then people say, no, it's not. It's trash. It's made up. So we'll see. We'll see. But it does have demand of the market right now when it comes to electric vehicles. And you're going to hear, oh, there's no demand for electric vehicles because who is it? Toyota or GM or Ford they stop production of certain, they can't afford it. They're broke. They're giving market share over to Tesla. It's only a matter of time before Tesla eats them up. They can't afford to keep making EVs. So this is, to me, Tesla is the best stock in the market, right? That is safe. Oh, that's so volatile. Well, buy it when it's coming down. It's only not safe when you buy it when everybody already owns it and it's overbought. But when it's extremely oversold, right? And somebody called me a simp, by the way. I don't know if I can say that on here. A Tesla SIMP. And I was like, cool, great. I will be, because Tesla is the best stock in the market in my view, right? That's a compliment because it's going to go higher. We'll see. Hopefully, things could go wrong, but I'm pretty confident that we are in an exponential age right now where all governments are literally funding electric vehicles. All governments, Europe, China, the transition into electric vehicles is here. There's no denying that. Governments are there's literally a tax incentive to own an electric vehicle. Right? You're going to fight the government. You're going to fight a secular trend. You're going to fight the mobile wave. That's like saying, I'm going to short Apple back in 2011 when literally iPhones are becoming a thing. You don't want to short a secular trend. You don't want to short a trend, maybe in the short term, but you don't want to short a long trend. All the guys who ever short Tesla, guess what? They lost big. They lost big. If you do want to go live, let me know. I'll do it. I'll put the microphone. Oh, I forgot to learn how to do. I'll put the microphone on TikTok if you guys do want to challenge or have some thoughts or anything. Always open for debate. Always open to get better thoughts out there. I don't know everything. I could be wrong about certain things. I could be wrong about a lot of things. But it's better that people hear the debate. It's better that people hear both sides and then decide for themselves, right? I am not the end all be all. I'm just trying to give the best I can, the best debate, information I can. Anyways, what do you think about tomorrow's SPY? People always say, what about, I think SPY pulls back at some point. It's up a lot. Or you could have the melt up, a squeeze. There's a lot of stops up here, right? If you look at S&P, there's a lot of stops. These guys could get stopped out. There isn't a whole lot of negative news. What could be the catalyst? You got to look at the macro. What is the macro signaling? By the way, we just got an article, largest cuts to S&P 500 EPS estimates for the in the first month of the quarter since 2020. Market still went higher. What does that mean? That forecasters cut S&P 500 estimates at the largest rate for the last 3 years, but market still went higher. Why? Because it's already priced in. Because those cuts are to companies that suck. This is survival of the fittest, and the best fit companies are moving higher while the companies who suck are going lower. So when you hear, oh, well, a lot of companies are in recession. Well, it's been a rolling recession. And guess what? The big companies are not in recession, right? Berkshire Hathaway has 160 billion. Apple has 160 billion of cash on the sideline. They're not in recession. They're not in recession. Certain companies are in recession and they're going to struggle, but that is not, there's a bull market somewhere. How do you invest commodities with contango? I don't know. I don't do that. I'm not going to sit there and act like I know how that works. I've heard about it, but I'm not an expert on that. I'm not going to talk on something I don't understand. Better to do options as opposed to physical shares? No. If you don't know what you're doing, if you're asking the question, should I do options versus shares? You should stick with shares. Options will tear you up. If you don't know what they are, you have to learn what they are first. I have on our website, I do have some information on options. Just look up options trading, how to pick an option. Shout out to Aaron Okinga. He wrote that article. It is on our website, or you could just look it up. There's information on how to trade options everywhere, but heck no, options will tear you up if you don't know what you're doing. Stick with shares first. Okay, this is what I would do. Stick with shares, and trust me, I've got burned many times. Stick with shares, and then learn options. Don't even mess. If you're gonna mess with options, barely throw any money in. You're gonna lose money. Listen, if you're gonna mess with options, you're gonna lose a lot of money. First, you got to lose to win, right? So don't be putting in big investments because you're gonna lose. Two big gaps below the S&P. Yeah. There's those big. That's why I'm saying we might pull back, or we will pull back. The question is how what magnitude does the S&P actually pull back? And these are the gaps he's talking about. If you have TradingView, you can literally, I just found this indicator. It's called gaps, literally called gaps. You just hit it, right? Gaps updated, and it'll show you the gaps. There we go. There's our gaps. So in general, right, here's what we're looking at. We're looking for the S&P to pull back, oops, and fill these gaps. Here's your gap. This is resistance. This is also a gap that got filled and then reversed. You can see earlier we filled the gap right here, this red gap, reversed lower, much lower. Now we're filling this gap. I would say that we do pull back, right? It could be ugly tomorrow. It could be ugly because the market is strong. I could be wrong. I don't know. We can't predict the future, but we do lay out if then statements. So maybe we fill this gap and then we go higher. Maybe we fill this gap, we fall to the next gap, and then we go higher, and then you get that reverse head and shoulders, or maybe we just fall off. I just don't see this probability of falling off. Where is it going to come from? Inflation is down. We already went over. I'm not even talking about it. Tesla held strong today, in my opinion. It did. Tesla had a very nice. I know a lot of people got blown out today on Tesla on the short side. They might have made money, but if they overstayed their welcome, they got burned because actually it looks better on this one. This is my trading. I'm off of TOS, by the way. They switched to Schwab and they reset all my damn charts. Pissed me off. They didn't even let me save my settings, and I don't want to do that again. So they can have my money. I didn't have that much in there anyway. So yeah, look at this big wedge pattern. So you had that big fallout. You had a reverse head, and I guess it's hard to see here, but you basically saw. Let me take that off. You basically had a big wedge for the whole day, and then it just broke out. It just broke out. All that news is getting filtered in here. This was a day of news. Are price cuts coming? Are they not coming? I'm sorry, are price increases coming, which would increase valuations and profitability? If that is the case, a lot of these shorts got, they got pushed out. This is a cup and handle. By the way, this is a cup and handle pattern right here. Okay, it's hard to see because I have a bunch of stuff marked up, but you get the cup, you get the handle, which is also a wedge, right? Carbides, boom, breakout. So Tesla is starting to rip. Especially with the S&P moving higher. It's been underperforming the market. We'll see if it starts to. Today kind of gave me this change of character feeling about Tesla, which is it could be outperforming the market over the next couple days. He's really educational. Have to respect that. Keep educating. Never stop learning. Yeah, never stop learning. TLT, what's up? TLT's ripping. Yeah, there's a lot of inflows in TLT. Can you go over AMD, please? Hey, I appreciate the manners there, please. I do appreciate it. Yes, I'll go over AMD. Let me go to the YouTube comments also. Look, if you guys go to YouTube, I'm going to answer your questions a lot sooner. Is it a marketing tactic? Sure, duh, whatever. The thing is, I get lost in the comments on TikTok. I'm not going to go scroll back. It's annoying. So if you could literally go to YouTube, give your comment, your question, and then jump back on a TikTok. I don't really care. But I want to make sure I address it, and it gets lost on that stupid feed. What do we have on here? Yeah, Tesla trying to short. What up, Hassan? Tesla's trying to burn shorts between 260. Yeah, trying to burn those shorts 100%. 190 is a spot where buys were valid. Yep, you got in. Congratulations. One red flag about electric cars is their depreciation rate after a few years. You're probably. I'm not gonna comment on that because I'm a hyperbole on electric vehicles. You're probably right. You're probably right to some degree, but I'm sure there's another nuanced nuanced information on that. It's probably really nuanced. It's not just simple black or white, right? But you're probably right to some degree. Hassan, Chainlink, would you add at this price? No, I wouldn't. I'm waiting for a pullback. Look, when crypto rips, if you watch my channel, I talk about stocks a lot more, but I've been irresponsibly long Chainlink. I'm going to show my position this week. Okay, I'm going to show my position this week. I just don't want to be a show off. I'm pretty long Chainlink, more long Chainlink than I am Ethereum and Bitcoin and Tesla at this point. And it is ripping at the moment. It is ripping. I'm waiting for a pullback to add more. I'm pissed. Like, come on, come back down. Chainlink is exploding. And guess what? It has the most value capture out of any asset that I've seen at this point. Okay, we could debate on Chainlink all day. Not XRP. And look, a rising tide lifts all boats. If crypto breaks out, everything breaks out. The question is, do they go to all-time highs? Can they continue to gain fundamental value going forward? Do they have a real use case? Most cryptos do not. Okay, sorry, AMD guy. I'll go over AMD really quick. Let's go over AMD. I'm going to be quick on this. Like AMD, broke out of this gigantic, like this is powerful. AMD is huge. Okay, AMD is really hard, but I think the momentum is now to the upside. It's gonna go quick. When AMD moves, it moves. Okay, when it moves, it moves. Let's turn on the. Oh, I need to take this off. Actually, no, I'm gonna leave that on. Let's turn on. Did I take the moving averages off? Damn it. I guess I got confused. Oh no, this is the wrong one. Okay, here we go. AMD. My bad. All right, daily. Let's see where those SMAs at. I bet you the simple moving averages are starting to converge. What is this? Let's get rid of this. Let's get rid of this. I bet the moving averages are now starting to. Yep, you get the 50-day moving average. That's the green one. Is starting to. What is the word for this? I always lose words. Damn, I look stupid. What is the word? Because this is an important word to put in your for moving averages that you want to think about. It's now starting to, I don't want to say up, it's upping, it's elevating. I'm a loss for words. Oh, that pisses me off. I can't think of it. Slope, there you go. It's sloping higher. When you see the slope move up, that tells you the momentum is picking up. Now you're looking for the golden cross, right? You want to see green. The perfect scenario for AMD right now, here's your resistance. Okay, the word was slope. I couldn't think of it. Here's a really solid resistance for AMD. It's already above that resistance level. Okay, it's already above that resistance. So I would want to see a consolidation. It might just rip higher. Don't chase it. That's my thing. Don't chase it. I want to see a consolidation, but also as it consolidates, you're going to see that 50-day start to cross, and you always want to see a sharp pullback into a upward sloping moving average. As the moving average slopes up, and you got a sharp pullback, it's almost like a sell-off into momentum to the upside. That's where you want to get long, given that it's above support, right? Above an important level, a key level. Dang, Tesla looks good now. So AMD is probably one of the best setups, I think, in the market. I think it is one of the best setups for sure with an actual catalyst going into year end. I wouldn't even doubt if AMD gets back to 160 sometime between December and February, because they don't care about consumers. This is all being moved off of policy, fiscal policy, new chips, gaming, right? New revenues. And who knows? We'll see. But AMD, you got 112, 111, 112. You got the moving averages. It's above all the moving averages. You want to see a really sharp pullback. Keep your eye on yields. It's very sensitive to bond yields. So if bond yields stay pretty soft, this is going higher. Carbides, they don't have to be filled. That's a myth. Oh, okay. He said, why is it that gaps have to be filled? Yeah, gaps don't have to be filled. Some people say they're filled most of the time. Some people say they always have to be filled. They're never filled. It's probabilistic. That's just a line of support that for sure. I would say the S&P fills gaps more than other stocks. Some stocks never fill the gap. Every stock has a different characteristic. SPY looks different than the Qs. So it's just more than likely to fill at some point, but it doesn't mean it always has to fill, right? 100%. Gaps are, here's carbides. Gaps are a great points of resistance and support. So maybe they'll appear to fill because no trading took place in that area. And once it's breached, we're in unknown territory. Yep. Tigger Media, thanks. After setting up my Charles Schwab, I could use my Thinkorswim app again. Okay. Yeah, I didn't even want to set it up. I was just like, it takes a lot of power on my computer too, and it slows down. So I might just switch to TradingView. I might just try to try to increase my TradingView knowledge. I might just do that. I miss the old platform. Not really. I can open more windows on here too. It doesn't slow down my computer as much. So that's a plus. You always get a trade-off. Got 2:30 calls for Friday. His name is Oshish Taxes. Okay. Good luck. Big man's coming. I don't know. I know don't go putting positivity out there. It doesn't come back out. Sorry, big man. Come on, big man. Give me a clear sentence. I think I know what you're trying to say, though. I can care less if people are not positive. It's irrelevant for whoever whoever, if this benefits you, it benefits you. If it does, I like it. I have fun doing it anyway, so it's regardless. I don't really care about. Yeah, hit the likes on the stream if you don't mind. Help me out. The algorithm, sub if you're not subbed, if you want to get all the notifications when I do come out. But yeah, cool. If he live on, man, you guys need to have better grammar here. Some of you guys, if he live on a different platform, you mean is he live? Like sometimes you do the I know it messes up sometimes, but when you're consistently, your grammar's off. And I'm not the best at grammar, but come on, guys, increase your. I was a teacher. Get it up. Use Grammarly, or just don't be lazy. Honestly, just don't be lazy. If you're lazy and you're typing, you're gonna be lazy in the market. Bronzo, yeah, I'm calling you out, but good luck. And also, it's harder to understand what you're saying. I can't read it clearly, so just be more clear. What is your website address? Link is it's mindgrowth.io. Link is in the description. There's a free newsletter. Won't be free forever. We're building a course on there. We're building. There's a lot of free information. There's a bunch of free information, knees over toes workouts, diets, because I'm going to do fitness pretty soon. Probably starting next year, we're going to start going more into fitness. That's my forte. Markets are secondary. And then also, it's link is in my bio. Just go to my bio. It'll take you to my profile, and then you can go onto the website from there. Tesla gaps. Options will tear you up, but when you're ready, stick it. Yep. CrowdStrike is killing it for sure. What do you mean, Schwab? Can have your money? Oh, because I have a stock. I bought one stock in my I had Palantir back at like $7 or $6 just to keep it running. And so it's up it's probably up like to $19. I don't really care. Converge. I'm in gravy in AMD shares. Okay, you're deep in AMD. AMD will do well. Nvidia looks good. Nvidia really looks good. They do have earnings, so it's going to be tricky. I think it would be amazing if Nvidia came back and filled this gap. I doubt it's going to happen. Maybe it does. Who knows? But Nvidia looks primed to just explode even higher. I mean, if that wasn't a consolidation, I don't know what is. This is a consolidation above the highs, very hype stock. Revenues is insane. And I don't want Nvidia. I don't really want to own it because I think Tesla still has more potential than Nvidia at some point into the future. But Nvidia is a beast. Oh, heavy. You meant heavy. Okay, thanks for correcting yourself. See, that's what I'm talking about. Instead of crying, other people will cry, oh my God, you're mean. He just corrected he corrected himself. Yeah, I always do that. I misspell all the time, especially when I try to do the talking and it mischaracterizes what I'm trying to say. It pisses me off, but hey, you got to correct yourself. That's why if you can't correct yourself on the little things, you're going to mess up on the big things. Lost everything in option trading last 2 days. You lost everything. Well, my friend, you probably need better education. But hey, at least you can own up to it. I've made big losses too. Nasdaq needs to stretch more to short bears. Nasdaq needs to stretch a little more. Let's see. Yeah, Nasdaq is at that zone. I mean, it's at that zone. We probably do get a pullback, but it is at that zone where it's probably does pull back. It looks pretty. I thought we were gonna get a pullback today, honestly, and it looks like we were. But then there's a lot of shorts are covering. Shorts are covering. Longs who are afraid to miss out on the rally are getting long, and you just get this face ripping rally. But it'll cool. Palantir to 20. Yeah, I'm long Palantir. Palantir's a beast. Brody, why you got the Harry Potter 11s on? I actually want to upgrade these. I got to upgrade these Harry Potters because Harry Potter got the magic, bro. What are you talking about? I never really was into Harry Potter, but I like, when I was younger, I was into like Dragon Ball Z. I don't mind the story. Harry Potter's actually, I'm not going to get into that, but yeah, I actually want to upgrade these. I got to get these upgraded. I just need to get an eye exam. I like them. I like to be different. I'm typing with swipe text. Yeah, it sucks. I feel you, Bronzo. Or Brozo. I feel you. I do that all the time. I mess up. Boeing, how much you make this year? Oh, I don't talk about how much I make. If you're good at trading, why teach a course? How to become a profitable trader? I'm going to get into trading So this course is going to be like market IQ, increasing your market IQ for trading. Trading is hard. Here's the thing: trading, like day trading, is very hard. Position trading, a much easier. Position trading, I have a certain style of trading that I'm best at. I'm not best at all the styles, so that's what I'm gonna talk about most. And I think I'll maybe next year I'll start dipping into actual day trading. But day trading, you're gonna lose. Like it's against you. It's way harder of something to do. So I'm gonna start with the easier thing and then work my way up. Oh, you talking about Chainlink? Thanks, Dimaj, for the advocation to like the stream. Last move to 8 to 11, barely pulled back to 1050. I know I missed that 1050 so bad, man. I missed it. I thought it was going to keep coming down and it popped up quick. I should have got it. But it is what it is. Stick with my plan. On the point and figure chart, link is at resistance above 1450 to target 1550. Harry Potter is crazy. Harry Potter, bro. Shout out to Harry Potter. NASDAQ is at the top of a downward channel. Yeah, it's at the top of the downward channel. We should get a pullback. I think it comes this week. Going into I'm thinking we pull back and we consolidate. There's not a whole lot of fear. Yields are not going up until the inflation report, which I think is going to be better than most people expect. I mean, the macro is it's all about the macro right now, and the macro is now starting to turn. It's now starting to turn. Yields are down. The Fed is done hiking. The Fed is done. What else do you want? The Fed is done hiking. How to become a profitable trader. Listen, that is the hard. Trading is one of the hardest things you could do. So I'm going to spend a lot of time on being a consistently profitable trader. Okay. And that's more so day trading, swing trading, whatever. I get it. But that's a hard thing to do. So eventually stay tuned. I'm not doing that content yet. I'm the only profitable. I'm the only profitable trader I know directly. People with EMAs and zones, while it does work. Okay, shout out to you. If you're a profitable trader consistently, then you're probably a smart, disciplined person. Good work. Are you going to be dieting? Am I going to be dieting? I mean, I've done it all, bro. I don't really diet. It's complicated. Nutrition is more important. That's a whole nother. I'll put it this way: we do Bronzo. We do on Fridays at I think the time changed. So 4 p.m. my time is now going to be 6 p.m. Central, 6 p.m. Eastern time. We do fitness lives on our fitness channel on TikTok, fitness, and we talk about all that. So I don't want to change the content, but we talk about dieting, all that stuff: lose weight, gain muscle, protein, whatever, get bigger, blah blah blah. I used to be a personal trainer. That was my first thing. I played D1 football. I played running back at New Mexico State University. Got nothing but injured, but fitness is my number one thing, actually. But I'm putting it to the side and working on my weakness for the past 5 years, trying to understand how the market works. And I can't wait to get to the gym after this because I need to work out. When this thing tanks $200, it'll be wild for a lot of people. I don't even know what you're talking about. Big losses will always happen with options. Yeah. Understand that options is very close to gambling. If you don't listen, it's only gambling if you don't know what you're doing. If you don't know what you're doing, it is gambling. Would you say? So this time, is good news going to be positive for the market? Is good news going to be positive for the market? I don't know. We got to see. This market changes really quick. So we got to see. I'd just say, I don't know, bro. It's been changing a lot. I think expected news is good for the market. Anything that is expected is good. Any unexpectation to the upside, to the downside, is a little more worse. A little more worse. Can't even talk. Is not that good. So I'd say that what's bullish for the market is as expected. No surprises. I'm glad to know that the only profitable trader known to man is here watching you. I know. I know. It is what it is. Let's see what else we have. People need to stop trying to get rich quick. Real trading involves losses. It does. Yeah, it does. It does involve losses. You can't get rich. That's where people scam people. They can say, I'll teach you how to day trade. Bro, those are scams. I'm gonna tell you guys right now. Anybody who tells you that you're gonna be you want to learn how the market, if you're making money, you don't know why, then you're basically wasting your time. Like you're getting scammed. So what is the best advice for what? What do you can be a real options trading without gambling your account. You have to know how to manage risk. Yeah, 100%. Study Brian Shannon's work with VWAP. Yeah, Brian Shannon's a good resource. He's VWAP. I always used to call it VWAP. Now it's VWAP. You need to also know when news drops and correlates. Yeah, 100%. Macro. That's why I'm doing the macro course. It's macro cycles. And I would say my specialty is the technicals and the macro fundamentals. I do more macro fundamentals, not like super in-depth fundamentals, but I did have one the other day. Either way, just stay tuned. Just stay tuned. We see better numbers in terms of inflation report. Oh, inflation report. Yeah, I think these numbers are going to come in good. Let's see. What did you say? Actually, give me a second really quick. Hold on. The food? Thanks. So yeah, the numbers for inflation, core is coming down. Headline should be better than expected. We can look at the expectations, but I'm pretty sure they're going to be coming good. Do you ever average in on your trade? Bronzo, yes, I do average in on my trades, depending on how I trade. But there has to be it's hard to explain that, but it has to be a very specific setup for me to average in on my trade. I rather do pullbacks than breakouts for my trading. I want pullbacks. I want very aggressive pullbacks. I don't want breakouts. If I was scalping, I would do more breakouts. And time frames change, so it really depends what you're looking at as far as time frames. What is it? All right, what else do we got? Any questions, concerns? I don't want to make this too long. We're at 57 minutes. I would say over the next couple days, the SPY probably does pull back. S&P stocks might pull back. If it doesn't, then, we just keep melting up. Slowly, it might look something like this, where we just kept melting higher, and nobody could believe it. A lot of people getting squeezed. There was something else I wanted to point out. The Fed pause is going to be very bullish for the market. Can I talk a little bit about crypto? Yeah. We'll talk about crypto. Actually, yeah, good call there. Sometimes I forget what I was going to talk about. Let's go to crypto. Bitcoin. So Bitcoin is now above the big level, right? Bitcoin is now above the big level. So you're basically seeing the bull market start. We should be seeing the ETF at some point. It might come this year. Who knows? We never really know. But there's not a whole lot of supply of Bitcoins. Long-term holders own like 70% of Bitcoin. It's going higher. It's a proxy for all of crypto. I think Ethereum moves up before Bitcoin. What is this saying? Oh, okay. Yeah, I'm not using that. Hold on. Let me take this off. Ethereum is breaking out. It broke out of this falling flag pattern. It is now starting to break. Alts have been moving up strong. Chainlink just straight up rocket, right? You got Chainlink like a rocket, waiting for that pullback. I think it goes to 18. I think it can go to somewhere between 18 and 16 and 18. Maybe not now. I don't want to cause FOMO, but I'd wait for a pullback. It is in a zone of resistance, but if it does pull back, I would love for it to come back to 10, honestly. Everybody's a little more biased. Also, you have the graph. I used to be in this is showing the graph is an index protocol. It does what Google does for crypto, indexing data. It doesn't have a big revenue monetization, but it is very useful. Vitalik Buterin, who is actually the creator of Ethereum, really loves this. But what you're getting here is, and if this thing has a small market cap, it's like 1 billion. So it doesn't take much for it to move. But But if you get this cup and handle, that's kind of what you're getting. Cup and handle breakout, right? This thing can move. All-time high is $2.50 pretty much. It is at 13 cents. But I'm not trying to shield this coin. If I were, it's going to be Chainlink I'm most bullish on. XRP is starting to move. Solana is starting to move. But yeah, when it comes to Chainlink though, in general, like Isan, there's not a project in crypto that is getting as much institutional adoption of the actual protocol than Chainlink. Not one. Bitcoin is a store of value. Bitcoin is digital gold. Its market is literally debasement of currency. Okay, you debase a currency, it has to go somewhere where it can't be debased. Anti-inflationary doesn't mean when inflation is going up. It means when the Fed debases currency, crypto goes higher, Bitcoin goes higher. That's the use case. Ethereum is a platform to create smart contracts on. None of these smart contracts, 80% of all smart contracts need Chainlink, right? The biggest financial conference in the world is called Sibos. I think it's in Switzerland. Guess who the head speaker was? It was the Chainlink. It was the Chainlink CEO. I don't know if he's called CEO, but his name is Sergey Nazarov. This project has been worked on since 2014. It started in 2014. Okay. I think it has the most upside. If you listen to some people, and I don't want to be super crazy bullish, but the use case is wider than Bitcoin and Ethereum for Chainlink. It's a wider use case. The thing is, if it plugs in, so every bank has a chain. Every bank's going to have its own chain. Also, Quant Network, they don't. Here's the thing about Quant. Quant doesn't have. It's not competing with. It's competing with Chainlink, but it's kind of like comparing Yahoo to Google. Not really a competitor. It doesn't have the security. It doesn't have the network effect. Not even close. It doesn't have the network effect. Can Quant go higher? 100%. But it's not competing with Chainlink. Fear crypto. Sorry, I know you're not going to like that, but that's my full view on it. I'm not going to say it lightly. It's just not competing with Chainlink. They're not getting adopted by Swift. Swift is adopting Chainlink. The Swift network, the global messaging central bank system, is adopting Chainlink. The World Economic Forum is literally talking about Chainlink. They've been talking about Chainlink since 2020. Those are the people who control the world. Tokenization of all real world assets starts with Chainlink, CCIP, cross-chain interoperability. You cannot create a stable coin that actually can talk to other chains without CCIP. Therefore, Chainlink is the number one asset to benefit from the tokenization of all real world assets, right? And there's other features on it too, like a verifiable web. What does that mean? It means communication, verification without giving up your data, otherwise known as zero knowledge proofs. This will come into play when AI really starts fooling people and AI gets really dangerous. You're going to need some way to prove that something is true without giving up the credentials. That's zero knowledge proofs. It also has proof of reserves, which basically proof of reserves is a mechanism that anybody can use, banks or crypto blockchains. And what it does is it reveals that an entity in real time has the assets that they say they have. It's literally giving you a feedback of, it's almost like, what do you call those? People who verify banks, are they doing the right stuff? What the hell? I can't even think. Like an auditor. It's like an automatic audit, right? It's auditing in real time. That doesn't exist. All of DeFi doesn't work without Chainlink. It is not just an Oracle. It's others. It's not just price feeds. It does a lot of stuff. So I think it has the most upside by far. You're going to hear me talk about it over and over and over. And then maybe in 2 years in the next cycle, you'll be like, hey, that guy was right? I'm pretty confident about this. I think it's the best opportunity I've ever seen. It was definitely a better opportunity back here at $5 when we literally say, you guys were here on the chat when we said, hey, we're buying Chainlink at $5. Here's why. Wrote a blog post on it and all that. I know some people are going to be pissed, but that's fine. I will definitely not afraid to debate on it. So yeah, that's it with Chainlink. What up, AB? What about XRP? Bro, look, XRP will go higher. We'll take a look at XRP. I started to buy at 5. Asan, you're in the money, bro. You're killing it. XRP had a nice burst. Okay, now look, I'm not here to trash XRP, but what I will say is XRP, the use case, the long-term use case for XRP. Let me take a drink of water. I haven't even drank. The long-term use case for XRP depends on central banks, okay? Central banks, as in not just central banks, but commercial banks around the world. They're this is gonna hurt your feelings. XRP's use case depends on banks not creating their own chains, but using the XRP ledger, using XRP as the blockchain to plug into. The problem is they don't want to do that. They don't want to take the risk of being in XRP. XRPers, the maxis, they're not going to tell you this. They're going to lie to you. Okay. And I'm not saying they're doing it to be, evil or anything. It's just people get caught up in their own narrative and they don't want to look at the research. They don't want to be proven wrong. You bring it up and they don't want to talk about it. But I've seen people on lives talk about XRP. They don't know what they're talking about. Does the coin go higher? Yeah, there's a lot of adoption. A lot of people own it. But why is it that XRP hasn't made a new high since 2017? Okay, here's 2017. Here's the new cycle. Couldn't make a new high. The use case for XRP is just not there. It looks really good technically, and maybe it does break out all-time highs, but that'd be like a $100 billion market cap. Who's gonna adopt XRP? Who? There's only a couple of people who use it, which is the founders, right? Ripple. And they say XRP is not a security. Who cares? The question is, do you have a use case? Are you going to be globally adopted by banks and central banks? No, because they're going to go on chain. They're going to create their own chains. Okay, they want their own chains. They're not going to use XRP's chain. They've already said that. Show me some evidence where they're using XRP. They're not. Sorry to say it. They're using their own chains. And that's why this is where a chain link comes in. If they use their own private chains, the way they connect to each other is by using cross-chain interoperability, not using XRP. XRP, they have to go shift onto a whole nother network. They don't want to do that. They want to use their own networks. It's being used for payment and exchanges in places like Saudi Arabia. I've heard. That's the whole thing. I've heard, but the use case is not, I'm talking about total addressable market here. The use case for XRP is not growing. It's actually contracted because they believe that the whole world will adopt XRP, right? The big banks, JP Morgan, Wells Fargo, any asset managers, banks in China, banks in Hong Kong. Guess what they are using? They're using Chainlink. Hong Kong is actually announcing that they are using Chainlink to digitize the Hong Kong dollar, right? They're digitizing their currency and they have to use CCIP in order for that to interact with other banks. That XRP, they're not using XRP. Nobody's using XRP. And they're not even the same. They're not even the same things. An easy analogy, I'm trying to think of an easy analogy, is like, are you going to, it's basically like this. Are you going to go drive to the bank to do a transaction? Or are you just going to use your phone, right? XRP was betting that people or banks would go to the bank, to go to the physical ATM to get cash out. This is the analogy. They would go to the physical ATM to get cash. That's what they were betting on. Everybody's going to come to our ATM for liquidity, to get liquidity on chain, faster, cheaper, whatever. And then Chainlink came out with CCIP, which is like mobile banking. Mobile banking. Well, I don't really need to go get cash because why would I go do that when people don't need cash? They want Apple Pay, right? Cash is irrelevant. You don't need to go to the ATM. I can just literally pay on my phone, and I can pay somebody else on my phone. I don't need to go to an ATM. The ATM for XRP is the liquidity. They thought the other central banks would use XRP as liquidity, right? As liquidity in order to meet together in one place. But that's not the case. That's not happening. They're actually going to connect to each other without any centralized well, it's supposed to be decentralized, but they're not doing that. They're using CCIP. You heard about the quantum computers that supposedly speed up transactions and eliminate crypto. Yeah, it's kind of a theory. It's not really a real use case. Maybe in 2030, the quantum computers that can do that won't actually be realized till for years. So maybe AI speeds that up. We'll see. Which is why CCIP is so important, or Chainlink, because it creates zero knowledge proofs or smart contracts that literally block. This is really hard to explain. That literally block any type of manipulation. So I think Chainlink has the most wide use case for sure. When was the last time you used real cash to buy something? I don't use cash. As a matter of fact, I get pissed when I have to use cash. I went to the sushi restaurant and they have to tip in cash. So I had to go walk to an ATM. Last time I would literally did that was literally like a year ago when I went to the ATM for cash. So nobody uses cash. Nobody will use XRP. Will XRP go higher? Yes, because people want to trade it, just like Dogecoin, just like Shiba Coin. I'm not saying XRP has zero use case. There is a use case. The use case is just not as big as was once hoped for. That's it. Right. So yeah, I don't use cash. We don't use cash around here. Anything else? Anybody got anything else? Like I said, working on the course, trying to get things moving here. Maybe we pull back tomorrow. I think the main takeaway here is here. Let's just go over the main takeaway while you guys are waiting. The main takeaway here is crypto is going much higher, of course. See if I missed something on my Twitter. Hold on. So we did a lot of talking. Is there something I'm missing? Let's see, Tesla, Model Y is going higher. NASDAQ, earnings, deflation. We talked about deflation. Inflation is not here. I would just say this. If you guys come on my stream again, or you know anybody who really is trying to push inflation's coming back in a real way, or inflation is reaccelerating, they're wrong. They're wrong. And I will debate them any day, anytime. Probably not any time because I got stuff to do, but I will debate them. And there's a lot of reasons why inflation is not coming back. Okay, the biggest reason is that GDP, right? U.S. GDP is coming down. And I wanted to show this chart really quick. This is actually, is it hard to see this on YouTube? It might be kind of hard. People try to say Benjamin Cohen, he's like a crypto guy. He tries to say that. The thing is, they were short Bitcoin. A lot of these crypto guys were short Bitcoin. They're like, Bitcoin's going to come down. And I'm like, I don't think so. I think it's going higher. Oh, here it is. So here's the highlighted area. You see that highlighted area? You guys probably ain't going to see it that good. So the blue line is the Fed funds rate. Okay. The last time in 2019, we got a pause. It was December of 18. We got the pause. I remember this because I was long Facebook and I was getting crushed. I had no clue about interest rates. This is why I taught myself this. I did not know why the market was going lower. The Fed was increasing rates. Why? Because this is when Donald Trump cut taxes. And so here, let me make this a little more clear. I'm going to have to widen this. Okay. And let's make this a little up here. So Donald Trump cut taxes, which increased liquidity and GDP growth, and it went higher. And this is GDP in blue. So the Fed was like, all right, well, we're going to actually tighten conditions because of that. So they tightened. Here's your tightening. There we go. Now we can see it. There's your tightening. So they increased rates while the tax cuts were basically coming into the market. They increased rates, and then finally they paused, and then they started cutting. Everybody thinks cutting rates is bearish. It is not bearish. The last cycle was not bearish. Here. Let me show you. I guess I don't have S&P up here. Damn it. Well, yeah. Let's just put it up. Let's just throw S&P up here. We have to do SPX, I think. Okay. So when they paused, you can see the market bottomed. The market clearly bottomed on the pause. So don't let somebody tell you they're gonna compare it to 08 or 2001, which were totally different messes. The market bottomed on the damn pause. Okay, it climbed higher. They started cutting rates, right? They were at 2.4%. They cut down to 1.8. So they're cutting rates. The market kept climbing. The market only dropped because of the pandemic. This is a black swan event, which came once in 100 years. That's why the market dropped on the rate cut. It wasn't because the Fed was cutting rates. It was because of the economy collapsed to zero. So rate cuts and pauses are not bearish. It is the other catalysts that cause growth to collapse, right? So the question is, why did they cut rates? Well, if we look at economic activity, this is in red. This is actual activity that front runs GDP. It was falling. It peaked around here where Bitcoin peaked. Bitcoin peaked also up here, which is why I'm about to top out Bitcoin, or at least get to the top this next cycle, because we read the macro, we read the technicals and the fundamentals at the same time. So economic activity started to fall. In red is economic activity. Once it goes below 50, that's when the economy is now due to collapse. Well, not collapse, to go into recession, right? It's going from expansion to contraction to slow down, and then recession. So this is why they started cutting, because it started crossing below 50. Right here, it crossed below 50. They started to cut rates. The market was still going higher. We just saw that it was fine. Economic activity actually bounced, and then boom, pandemic hit. That's what got the market down, the pandemic, right? It was the pandemic. It was not. And we can also look at, this is GDP. GDP came down at the same time. It started to rise on the rate cuts, and then boom, the pandemic, right? And then let's go ahead and put the unemployment rate. The unemployment rate was actually moving down. So everybody tells you the unemployment rate was spiking. Sorry, I was trying to read that. I guess I messed up. I said the unemployment rate was spiking. It was not spiking. The unemployment rate was actually flat. And then they cut rates and it was fine. It was the pandemic that caused it to go up. So that's another false narrative. There's just so many false narratives. And hey, call me out if I'm wrong, but this unemployment rate was falling. Okay, it wasn't going higher. Let's go to the non-farm payrolls, right? These are the payrolls, which people say, oh, payrolls have to go negative for the Fed to cut rates. Well, guess what? They cut rates and payrolls were not negative last time. Payrolls were, you can see the numbers up here. Wait, can you guys see it on TikTok? Maybe not. I guess my head's in the way. 150K. So you had 300,000 payrolls. This last report was 150. Came down to negative 22. So they started to pause, came back up. So they're adding 243,000 jobs. And then they added 67,000. That's pretty weak. They added 167. They added 82K. They added 232. They added 129. They're cutting rates while there's still jobs being added. Okay. And then the pandemic hit, boom, went to zero. So I just wanted to point out that the Fed has never orchestrated a soft landing simply because there's always a black swan event that hits. It's not because it's impossible. It never happened because of the black swan events, not because it's impossible to happen, right? So, hey, maybe they orchestrate another event. Who knows? But for the most part, inflation is coming down. It is falling. And I wanted to point that out. We also look at liquidity. Okay, if something breaks, commercial real estate is what they tell you is going to break, right? Well, the last time something broke in the market, you guys heard that banking stuff? Oh my God, look, this is how bad you get scammed. Banks are collapsing. Citizens Bank, bro, banks fall all the time. If any big banks actually failed, the Fed's balance sheet goes up. They start printing more money. Happened right here. I mean, I'll go all day about this. If we do see recession, it's probably going to come in 2024. Somewhere in the end of Q1, Q2, maybe summertime. But then you have to really factor in that, the White House isn't going to give out checks, free money. I think they do. I've said it all last year. It's a pre-election year. They probably go much higher. Well, it looks like that's it. Looks like that's all we got today. I'll be back on tomorrow again working on that course, so my times are going to be a little different. Fed never cut out of the kindness of their hearts. They typically cut when SHIT hits the fan. Yeah. I mean, I'd say they cut whenever the economy really starts to slow. Scooby-Dooby. Yeah, you guys have a great day too. I'm just going to argue with Scooby-Dooby a little bit on TikTok. But yeah, we've already seen the charts here. Hey, best to you guys again. Thank you, Tigger Media. I appreciate you guys. Shout out to you. Let me give you guys a shout out. Appreciate you guys for the support. As long as I can give some insight to the market, I'm going to keep doing it. Shout out to you guys. All right, I'll catch you guys later, YouTube. Stay fresh. Get your workout. Stay blessed.